In 24 hours, bargain hunting has given way for panic selling as bulls give way to the bear stampede. Both the Sensex and the Nifty fell over 2.5%, giving up most of the gains made in the last two trading sessions. Delays in the passage of key economic bills like the GST spooked market sentiment. The government today referred the GST amendment bill to a select panel, a move that could delay the rollout of this ambitious tax reform. Just last week, the government referred the land acquisition bill as well to a joint committee of parliament as the opposition refused to support Modi's legislative agenda.
Well, that's not all. A host of global factors have also spooked market sentiment. The global bond sell-off, for one, is playing on the minds of investors, with bond yields across the world surging to multi-month highs. Greece's dire debt situation is also adding to the stress. Athens has had to tap into an emergency fund to avoid an unprecedented default to the IMF. All this uncertainty led to an incredible amount of volatility in trade. You had the India VIX, which is an index of volatility, surge over 10% as traders turn cautious yet again.
The markets are on a roller coaster ride. After gaining over 900 points in the last two trading sessions, the markets succumbed to profit booking, with the Sensex and the Nifty tanking over 2% on Tuesday. So what caused the U-turn? Investors were hoping that two crucial economic bills, the GST bill and the land acquisition bill, would get the nod in the ongoing session of Parliament. But the government's decision to refer them to parliamentary panels has led to fears that the big bang economic reforms promised by the Modi Sarkar will remain just on paper.
We have seen quite a bit of volatility. There are a multitude of reasons. So when we had the bull run, after the general elections, there was a little bit of excess optimism that was built in about the new government having a very big impact even in the short term.
Global cues didn't help either, as Asian markets traded weak and the Greek financial crisis weighed on Wall Street. Back home, the rupee slipped as well, nearing its yearly low of 64.28. But some market experts are not giving up hope just yet.
We are still believers in the India story. We think the easy money has been made. From a mid-term perspective, we believe in the long-term potential for India.
But for the near term, worries remain. And with the country's factory output growth skidding to a 5-month low, many believe there could be more pain for investors in the days ahead. Ashwin Mohan, ET Now, Mumbai.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.